you and I might use the terms principal preservation. But what you'll discover when you talk to your investors, they won't use that language. They will say, I want to protect my investment. So don't try and be clever and say, we're big on principal preservation, because no one will understand it. And they're not using that language anyway. We are focused on protecting your investment. That's the language they use. Use that language back at them. And that's how you will animate responses that you want in terms of getting investments.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Adam Gower is the foremost authority on real estate crowdfunding and has published 5 books on the industry. Dr. Gower also combines a lifetime of experience in real estate investment and finance with best-of-class digital marketing strategy. Adam, welcome to the show.
Thank you for having me, Sam. It's a pleasure to be here.
Absolutely. The pleasure is mine. Adam, there are 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me, where did you start, where are you now, and how did you get there?
I started pulling wires for an electrician in Southern California in 1982. That's how I started, crawling around in basements and attics with dust, mice, and spiders. But from there, I started raising capital from Japanese investors for multifamily ground-up developments in San Diego. I ended up in Japan, actually heading up Universal Studios real estate development across Asia Pacific. I was president of that division. And in 2012, when the Jobs Act passed, coincidentally, I was doing some seed and angel investing, actually, in startups. And that's how I learned the language of digital marketing. And from there, I have built all modesty aside, the foremost marketing agency for sponsors raising capital online.
That sounds, like a really colorful, I can't speak today, colorful career. That's a problem here when we're on a podcast. I can't get my own mouth to work. But it sounds like a really colorful career all the way, not that 2012 till now hasn't been, but it almost sounds like a shift. One side of the business and then something completely new. Is that a fair summary there?
It sure is, actually, Sam. I went through the savings and loan crisis. I was, when it hit, I was in my mid to late 20s. And on paper, I was a multi-millionaire. I mean, I'd invested in all the deals that I was working on and considered myself to be very wealthy and successful. And then the bottom fell out and I lost everything. I really went to zero. I actually went into debt. It was worse than zero.
Wow.
And so that was my first experience of why this time is different, is nonsensical. People, this time's different. And then the second go around after I finished at the studios or running their real estate in Asia Pacific was the global, was the global financial crisis of 2007. And I had been lucky enough to sell my entire portfolio in 2007. So I got out, I was cash rich, no legacy issues, and I was brought into a major bank to help them clean their balance sheet. And during that period, I saw hundreds, if not thousands, of commercial real estate or loans collateralized by commercial real estate developments and value add, and I mean, you name it, that had all gone bad. And so I saw the way that everything, that was the second time I saw how stuff can go bad. And so it kind of made me gun shy, to be quite honest with you.
Sure.
And I just decided to become somebody that produces the shovels for the miners. So I produced it's like the gold miners, right? Only very few made money consistently in the long run, but the guys that built the shovels, they're the ones that you still talk about today. And so that's what I'm doing. Although I do some investing as well, just to be clear.
Right. That is, I love that. And yeah, I can only imagine, having narrowly escaped, because you're one of the few in the 07, 08, 09 crisis that walked away with your shirt on. Certainly, I
Yep.
would say 95% of the guests that have come on that talk about that, lost a pile of money in that period.
Yeah.
So you get out of
That
that.
was actually a very lucrative. That was actually a very lucrative period for me.
I'm sure.
Because what I was doing was transacting for both the bank and then subsequently for Colony Capital, who were one of the biggest private equity funds in the world at that time,
Right.
real estate private equity. And my job was to manage these large portfolios of non-performing loans and to sell them.
Right.
And so I made a lot of friends because I was helping people to buy distressed deals at discounted prices.
Right. Right. Yeah, absolutely. Absolutely. That sounds, and we could probably spend the entire show focused on that, but I really want to hear what birthed your idea. Okay, you're going to sell shovels. You're going to, but this is kind of a left turn with a brand new set of people you're working alongside of. How did that come to pass?
Yeah, it's funny. I was actually telling one of my sons this yesterday, that sometimes, you get a passion for something, but you don't really know where it's headed. And the same was true when I learned to speak Japanese. People ask me, what are you going to do with it? I said, well, I'll figure that out when I speak it.
Right.
When I got my PhD, people asked, well, what are you going to do with that? Okay, I don't know. I'm going to get it and then I'll figure out how to use it. And the same is true of digital marketing. I actually started, we'd bought a house up on the Central Coast and I was commuting back and forth from LA, actually from Beverly Hills. So we had a house there. We had one on the Central Coast. And so I was spending a lot of time in the car. And I figured, I'm going to learn how I suddenly got this PhD. I want to do a podcast. So I started listening to how to do a podcasts. And I didn't really know where anything was going to lead.
Sure.
But I learned how to produce a podcast, how to edit audio, how to build a website, how to create an email list, how to market the list. And it started to snowball. I suddenly started finding that there were people coming to me that I didn't know, who knew who I was, who thought I was the bee's knees. Of course, there was always the FU people as well that don't like anything at all that I have to say. But I then spoke to one of my friends who was a major sponsor. And I said, hey, listen, I can build a machine for you that attracts investors based on the models that I've developed for myself. Why don't you give me a shot? And he said, well, have you ever done it before for a sponsor? And I said, no. He said, all right, give it a shot. So he was my first client. And since then, if I can just wrap up, since then, we've developed by far the most advanced digital marketing systems for sponsors in the industry. Nobody comes close. And our clients manage over 35 billion, have over 35 billion of AUM, and have probably raised, and I say this now cautiously, I know they've raised at least 100 million because I have them on video saying that, but I don't have on video what they've really raised, and that is probably in excess of $1 billion in real estate equity capital. So that's how we grew, really, was not really knowing what direction we were in and just going with the market and serving our clients, basically what they need. Yeah.
How much of what you do is just constantly in flux? I feel like there's this constant moving thing of like, even I have a somebody that works for me. Can't think of what her title is at the moment. Golly, I told you I can't speak and I can't think. It's a tough day here on the show.
It's the drink that does it, Sam. That's the problem. The only problem with that is I never know if it's too much or too little.
Well, that would be an electrolyte drink here today. Several of those, and maybe that's what's wrong. The salt's off in my head. No, but
I think I can answer your question. I know what you're asking, and my drink of choice is heavy caffeine in the morning, so I'm hyper amped. So you asked me about what kind of variables or how does the industry evolve? There are two ways that it does that, basically. Sure, there are technology variances that are constantly changing, are constantly be upgraded. Constantly, there are new opportunities for tech platforms and techniques to exploit to maximize your performance, and we stay on top of all of those. We have a large network of developers who we work with. We have an inner circle. We share ideas and we explore everything. We test everything on the GowerCrowd.com website. And if it works, we roll it out to clients. So we stay ahead that way. But if you are not a tech person, there is another profoundly important flux in the market that happens all the time, sometimes with much bigger impact. And funnily enough, Sam, this is what you and I touched on in our pre-podcast chat, and that is the language of communication. So you have to, as a kind of basic rule, you need to be communicating with your network at least once a month. We did an investor sentiment survey at the end of last year, and you got to be sending out a newsletter at least once a month. And if you've got deals that you're trying to raise money for, if you're sending out newsletters, if you're doing paid advertising, it really doesn't matter. Or you're on social media, LinkedIn or Twitter or Facebook. It doesn't really matter what the medium is that you're using to communicate. You have to be tuned in to what investors' primary concern is today and now, so you can use the appropriate language to draw them into your ecosystem, into your network. And I will tell you that at the beginning of 2020, to just underscore this, I'll give you some very specific counsel now on this. At the beginning of 2022, you could still be talking about earning passive income and building wealth long-term. And it's like falling off a log raising money. Since interest rates have gone up, since the Russian invasion of the Ukraine, since cap rates are going up, prices are coming down, the stock market has fallen, inflation is eating away at savings, home prices are coming down. Investors are feeling less wealthy, and they are migrating to a principal preservation investment strategy. They are primarily focused on not losing money. So you have to use language that encourages your investors to understand that you are taking a defensive posture with your investing today. Explain how you're doing that. And that's how you're going to draw them in. Sorry, by the way, there is a second form of a second language pattern that's working particularly well at the moment. And that's, again, something, actually, we talked about this on the live podcast. Remarkably, as hesitant as investors are today, and I'm talking about passive investors, right, accredited investors, to invest in deals, they can always be motivated to unlock their wallets when they think they are getting a bargain. Mm-hmm. So if you have distressed deals, if you're able to find a deal that has some kind of distress component, if the seller's forced to sell for some reason, whatever the story is of the deal, particularly if it's some kind of forced exit that has yielded a better than market price, that is the kind of language that you want to be using in your marketing, because that is how you will activate an investor base that is otherwise sitting passively waiting for opportunities like that.
I like that a lot. That's you've hit on some really, I think, valuable things there. And I when you said the primary concern today, I wrote the question how. So you've hit on a lot of things I think that investors are thinking. Are there other ways that, or other mediums or channels that you're using that kind of let investors tell you what it is that their primary concerns are as well, to kind of help craft that story?
That's a really good question. So what we do with our clients is we encourage them to communicate, as I mentioned to you, regularly. Yeah. That means no less than once a month. Right. Periodically, it's actually really useful for you to conduct a survey. Just conduct a survey, send out an email. You know, if you're doing a monthly or weekly or bi-weekly newsletter that goes out to all your investors, every 6 months or so, whenever you want to know the answers, what's going on, conduct a survey and say, look, no newsletter these. In fact, here's another pro tip. In the subject line, which is what drives people to open your emails, use the subject line, I have a small favor to ask. Everybody opens those emails. It's just the coolest thing. So I have a small favor to ask. We like to set them up. We've set them up with Google surveys or SurveyMonkey. I like SurveyMonkey because they provide you some nice analytics afterwards. You pay for a month, it's like $100 to get more than 100. There's some functionality, it's worth it. Sure. But send out a survey to your investors and actually ask them, like, what's driving. But here's the thing to be really careful of when you do it, when you build a survey, make sure that the questions you ask elicit answers that are actionable. Don't ask questions that are like, okay, interesting, but what can we do with these answers? You can't do it. So think ahead. If we get a set of answers to this question, how will we use those answers? So, for example, one thing that you could ask is, and also try and use multiple choice. So what's driving your investment decision at the moment? What's your biggest concern? Is it inflation? Is it war? Is it politics? Is it right? Just ask a series and then always include a other option that somebody can fill out. So that's another kind of pro tip. It just helps people move through faster. And then always also include an open-ended, at least one open-ended answer that doesn't have a checkbox, right? So whatever it is, I mean, just pick one question like that and then gather those answers. And they will tell you. The other thing is that once you get those answers from your prospects or from your list, use their language. So, for example, you and I might use the terms principal preservation. But what you'll discover when you talk to your investors, they won't use that language. They will say, I want to protect my investment. So don't try and be clever and say, we're big on principal preservation, because no one will understand it and they're not using that language anyway. We are focused on protecting your investment. That's the language they use. Use that language back at them. And that's how you will animate responses that you want in terms of getting investments.
That's really sound advice, because we get lost in our own little world of phrases and acronyms and all this stuff, and then the everyday investor, they neither care and they just get confused by it, and they're like, okay, this is stupid, and they just stop.
Well, you know what they say, don't they? They say that if you want to impress people, use fancy language. If you want to raise money, dumb it down. You don't have to use fancy language.
I like that a lot. So you've built this platform, you've mastered digital marketing on the capital raising side of things. I think, if I'm not mistaken, you've written, what did you say, 5 books on the topic?
Yeah, I think 5. I have 5 at least. Yeah, 5, maybe 6. 6 actually, but 5 about commercial real estate investing.
That is really, really interesting. I want to get your thoughts on really where we are in the economy. I know you've mentioned, talking about how investors' appetites have changed, how raising money maybe a year and a half ago was like falling off a log. Things are slowing down. You mentioned earlier, you kind of chuckled when you said when they say the phrase "this time is different," and you kind of just laugh at them a little bit, like you're a bunch of idiots. Was kind of what the summary laugh is what I heard there. So give me kind of your thoughts on those 3 things I just threw at you, if you don't mind.
Yeah, okay. I'm not sure if I can remember all of them, but there are a couple of things. So you asked what's going on in the market. Mm-hmm. And by the way, just to come back to this time is different. I didn't laugh. I actually cried in 1989 when the market collapsed, or 1989, 90. I actually believed what everyone was saying about this time is different. I was in San Diego. The economy is booming. People are migrating here. Prices are going up. This time's different. Real estate prices are never going to come down. I really believed it. So it was a hard shock when I realized, no, actually things do come down. And they come down hard when they do. So anyway, just to correct that, now I know there's no such thing as this time is different, but that's a whole different story. 2 things you asked about. So what's going on in the market at the moment? So you mentioned that your listeners primarily are professional real estate investors, people who are raising money, they're capital raisers looking for capital to to finance their deals. So there's two things going on. First of all, you've got a lot of distress. I don't care what anybody says. Everybody is starting to sweat bullets about interest rates, resetting debt, interest caps expiring. There's a lot of stress out there in the market. And so the first thing that sponsors need to be thinking about is rescue capital, maybe putting in some pref equity to push down debt leverage, if your banks will allow you to do that, because they're going to want you to start paying down debt before they'll refinance it. And it's going to be very costly money as well. So you are going to need equity, end of story, right? Probably in Q3, Q4 is when it's going to really hurt. And the second thing is opportunities. The flip side of that is people that, sponsors who are new to the game, who have figured out how to do multifamily investing from, an online education program or something within the last 10 years, they're going to lose a lot of assets. And those assets are going to be considered distressed. They will sell at below market. But they're going to be tricky to unwrap as well, especially if you're buying notes. But what it does speak to is opportunity to buy at below market, period of wealth transfer. Both of these events, or both of these factors in the economy, require capital. You have to have equity capital. And the best people to get that from today is individual investors, not institutions, not family offices. Everyone's on the sidelines. Individual investors are your best alternative source for equity capital, both to save your own deals through recaps and also to capitalize on deal flow when distressed deals start coming down the pipe.
Yeah, that's it. I mean, that goes back to your own personal experience in, the 07, 08 period of being cash rich and seeing opportunity when it presented itself at that point in time. And it sounds like you think that's kind of where we're heading again, which I couldn't disagree with you on that front by any stretch. This has been absolutely fascinating. I've learned so much from you here today, from the digital marketing standpoint, from just how your experience both in commercial real estate and then also mastering digital marketing, talking about things that investors are concerned about today, how to discover what our investors are concerned about today and how to speak to that. So many things here to learn from. Adam, certainly appreciate you coming on the show today. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Thanks for asking, Sam. So really the best way is just to go to the website, gowercrowd.com. That's GOWER crowd, gowercrowd.com. There are over 1 million words of content on the website. So there's probably everything you need. There's all kinds of free courses and training, and sign up for the newsletter. We have a newsletter that goes out every Wednesday, covers the real estate syndication industry. It's free. You can always unsubscribe, but that's the best way to find me.
Adam, thank you again so much for coming on the show today. I certainly appreciate it.
Thanks for having me, Sam. It's been a real pleasure.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much, and hope to catch you on the next episode.